Hey, hello, hello. How are you guys? How you doing? How you doing? Who's in here? No one is still here. Hello, Mr. Hans. Hello, Jeff. How are you? Oh, right here. Hello, D. What's up? What's up? How you doing, guys? How was your morning? Slow for me. Very slow. Very slow. So let's give it 1 minute. Hello, Kevin. Chill morning. Dry August. Yeah. So sounds yeah, sounds like it's gonna end like that. Yeah. All right, guys. So let's get this started. All right. So today is Thursday, August the 27th. Yes. And this is going to be another no trade review. But I want to start by making an important distinction because yesterday was also a no trade day, and these 2 days could not have been more different, right? So yesterday was basically watching paint dry, super boring, right? There wasn't much happening. There wasn't much information. There wasn't much temptation. It was a very, very slow day. Today, completely different. Today, there was movement, there were reactions, there were important levels being tested, there were multiple moments where you could look at the chart and say, something is happening here. And yet, same result, right? No setup, no trade. But today's lesson is not really about patience, right? Today's lesson is about selectivity, right? Because sometimes the most dangerous market is not the market that gives you nothing, right? Sometimes it's the market that gives you just enough information to start convincing yourself that you have something, right? And that's what I want to break down today. So let's start with the plan. Coming into today's session, the context was very different from yesterday, right? We had been trading inside this 762, 768 range, right? Yesterday, that range finally broke, right? Then, following the Nvidia earnings, we had a significant overnight expansion. So coming into the session, I wasn't interested in chasing the overnight move, right? The move already happened, right? The question was, what the structure, let me show you the 15-minute chart right here. Right here. So the question was, what the structure is that move going to leave behind? And specifically, can buyers actually hold the breakout once the regular session opens? So the main breakout area I was watching was around 767.35 right here. 767.35 to 768.15. All these blocks, right? All these blocks. That was the previous range high. So for the bull case, I wanted to see buyers hold that area and establish acceptance above it, right? If yesterday's resistance starts becoming today's support, as it happened today, then the breakout is being validated. Above that, I have 769.17, then 770.55, then 771.66, and everything else. Pretty straightforward, right? But I was also very interested in the bear case, and notice how I define it. I was not saying SPY moved too much overnight, so I'm buying puts. No, no, no. I wasn't saying we are overextended. No, no, no. I wasn't trying to predict that the gap needed to fill, right? No, my bear case required information. First, lose the breakout area, then begin accepting back inside the previous range. And from there, I specifically wrote, I'm particularly interested in whether a loss of the breakout area is followed by a momentum shift and bearish market structure. That's important because my plan wasn't level then trade. No, my plan required a sequence. Location, then reaction, then structure, then execution. Keep that in mind as we move to the 1 minute chart. All right, let's go here. Let's go here. All right, now let's look at what happened. Right after the open, price reacts strongly from approximately 760 750. Right? And buyers push. Right? So immediately I have information. The area matters, right? Buyers are responding from the breakout zone. But remember, a reaction is information. A level is not a trade. So price continues higher, right? And eventually gets into this 769 area, right? 769 area. And this area was particularly interesting because we had a confluence of previous structure around 769.17 plus this descending trend line, right? This descending trend line, let me show you here. This descending trend line, right? So now look at what happens, all right? We get up there, right? And sellers rejected. Sellers rejected. Okay, that's information, right? Then buyers come back, all right, and we reject again. Then we try again, and again, sellers respond, right? Look at all these circles, right? Look at these reactions. So if you wanted to convince yourself to take puts today, the market was giving you plenty of material. You could say, oh, we are rejecting 769. We are rejecting the trend line. Sellers have defended this area multiple times. The overnight move was extended. We are struggling, all right, to continue higher. Right? And don't get me wrong, I mean, every one of those observations contains some truth, right? That's what makes this dangerous, right? This is where today's lesson begins, right? One of the easiest things to do as a trader is to start accumulating reasons to take the trade you already want to take. One reason is not enough, so you find another, then another, and then another. And eventually you have this entire story explaining why the trade makes sense. But here's the problem. A collection of valid observations does not automatically become a valid setup. Now, let's read that again on our own execution, right? A collection of valid observations, trend line, rejections, circles, right, does not automatically become a valid setup. All right. I had location. Absolutely. I had reaction. Absolutely. What I did not have was the complete structure required by my playbook. And without the structure, I don't have execution. That's the sequence: location, reaction, structure, execution. It's not location, reaction, reaction, reaction. Well, that's probably good enough. No, my setup definition doesn't change because the market is doing something interesting. And this is why I said today's no trade day was completely different from yesterday's. Yesterday tested patience. There simply wasn't much happening yesterday. Today was a different story. Today tested selectivity. Because today there were plenty of opportunities to manufacture something to do. And I think this is where standards become very real. Because it's easy to say, oh, I'm selective. And it's easy to say, I only take A+ trades. And it's easy to say, no setup, no trade. When the market is there, right? The standard gets tested when the market is moving, when levels are reacting, right? When you see something developing, right? When you are paying attention, and when you can create a perfectly reasonable explanation for why you should participate. That's when you find out whether your setup is actually defined or whether your setup changes according to how badly you want a trade. Now, watch what the market eventually tells us, right? Instead of sellers developing the bearish market structure I needed, right? Buyers begin holding higher, right? Holding higher, 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 higher. That's new information. Price starts reclaiming the trend line right here, and the 769 area, right? And at that point, the bearish idea I had starts losing relevance. That's it. There's nothing emotional about that. I don't need the market to go down because I had a bear case. A trading plan is not a prediction. It's preparation, right? The market gives me information, and my job is to respond to that information according to my system. Could SPY reverse after I close my session and go all the way back down? Absolutely, right? Could it continue ripping higher? Absolutely. Neither one matters to the quality of my execution, because by the time I finish my session, price has moved away from my area of interest without ever giving me the structure required to participate. So, no trade. And I want to be very deliberate about how we define today's result. Capital protected, mental capital protected, standards protected. There was no missed trade. There was no failed execution. There was no opportunity that I was entitled to capture. The market simply never produced my trade during my execution window. That's different. Because when you judge your day based on what price eventually does, every move you didn't capture can start feeling like a missed opportunity. But that's outcome-based thinking, right? My job is not to capture movement. My job is to execute my playbook. I don't trade the move, I trade the structure. And today, the structure never became my setup. So here's what I want you to take from today. Be very careful when you find yourself building a case for a trade, especially when your internal dialogue starts sounding like, well, we have this, and we also have this, and look at this rejection, and technically this could mean, and if this happens, stop, right? Ask a different question. Has my setup actually developed? Give me 1 second here. That's the question. Not, can I explain why this trade might work? No, that's not the question. Those are completely different standards. You can explain why almost any trade might work, right? You can find confluence everywhere if you look hard enough. You can create narratives. You can accumulate reasons, right? But professional selectivity requires something different. Your playbook should define what earns execution. The objective is not to find enough reasons to take a trade. No, let the trade become so obvious within your playbook that you don't need to manufacture reasons to take it. That's today's principle. 2 consecutive no trade days, right? Same execution result. Completely different performance challenge. Yesterday, can you wait when nothing is happening? But today, can you reject participation when plenty is happening, but your setup is not there? Both are part of execution. Both are part of professional selectivity. And both become much easier when the decision is not being reinvented live. Your playbook defines the condition. The market provides the evidence. You execute when they match. Otherwise, no setup, no trade. Another day executed according to the system. And as always, never let a trading day end without making tomorrow better. Right? So that's all that I have for you today, guys. Not sure if you have a question. Hello, Lilia. We miss you today. Hello, Kumar. So if you don't have any questions, guys, today was a very boring day. Well, it was more entertained than yesterday. It just, I didn't have any good chance to participate in the market. So, well, if you don't have any questions, I would like to thank you again for joining. Remember, tomorrow we don't have trade review. It's going to be until next Monday. For people in my community, tomorrow we have the weekly Q&A. And well, I'll see you tomorrow morning with our training plans. All right, guys, thank you very much. Have a good weekend if we don't see you, and see you later. Bye.